雷达里奥说，我们正身处 AI 泡沫，但千万别急着卖，真正该盯住的是那个刺破时刻。达里奥认为，当前 AI 热潮伴随巨额资金涌入，符合技术变革期泡沫的典型特征，虽不及1929年极端，但与2000年相似。关键在于，泡沫不等于技术无价值， AI 的革命性影响毋庸置疑，风险在于泡沫何时被什么刺破。他提醒，货币紧缩、债务展期压力、财富税争议以及私募、风投、地产等领域的裂痕都是早期信号。市场高度集中于少数 AI 巨头，而真正的受益者将是 AI 的应用者，而非仅限超大规模企业。他建议投资者保持多元化，同时警惕法币贬值风险，配置黄金等非债务资产。未来1-2年，随着2026年大选临近，财政赤字高企，市场将更趋动荡。简言之，享受泡沫的上升，但时刻准备迎接刺破后的调整。
So Ray, we have a long program of events coming up through the course of this week, and Abu Dhabi is going to be bringing in something like $63 trillion worth of asset managers through the course of this week as well. So a lot to keep in focus, but key on the agenda this week is AI, and this is one of your 5 forces that you like to talk about. So I want your take on what's happening with the AI trade right now as well. You have said that we are in bubble territory, but investors should not sell. Can you expand on that for me?
Well, I think there's the investor perspective and then there's the user perspective, right? I think it's important to distinguish the fact that this technology will have, without a doubt, revolutionarily beneficial impacts. That has nothing to do with a bubble, okay? All the bubbles took place in times of great technological change, a lot of money going in. It's never done precisely. It's either going to be too much or too little to make the profits. And then there's just this big up and down. A bubble is a set of circumstances where, for various reasons, the buying and the selling are unsustainable. Those who buy for their various reasons, whether there's debt in there and all of that. And then there's the pricking of a bubble. Okay, very important to make a difference, to understand the difference. So as a bubble is arising, you don't want to get out of it just because the bubble. You want to look for the prickling of the bubble, the pricking. And that usually has to do with the tightening of money. Whatever the force is, you have to realize that wealth is different from money. In a bubble, it's very easy to create wealth. You know, like nowadays, you can raise $50 million for a valuation of $1 billion. You are now a billionaire, and that's worth $1 billion on paper. But it doesn't mean you can sell that. And so when you get into a situation where the wealth has to be sold to raise money, typically maybe for debt service payments, but things like wealth taxes. Can you imagine if a wealth tax came over? Then you would have that kind of dynamic. So we're not going to have a tightening of monetary policy soon, and so in fact an easing. So you start to see these cracks. We're seeing cracks in the markets in a number of ways: private equity, venture capital, debt that's being refinanced, and all of those. So we are in a bubble, I believe, by almost all of those measures. Not the most extreme bubbles, quite similar to 2000, but not at the same level, not the same level as the 1929 bubble, but we are in that bubble. And then the question is, when does the bubble get pricked? Because wealth has to be sold to come up with the money to deliver it for whatever it's needed.
Not just when the bubble might be pricked, but what will it be pricked by? You've outlined some concerns. What would you say is the biggest risk right now to the momentum that we're seeing in the AI trade?
Well, you're seeing cracks in venture capital, private equity, real estate. You're seeing that interest rates on locked-in debt are now not going to exist. In other words, debt is now maturing, and that means that it has to be rolled forward. And that'll be rolled forward at higher interest rates. So that's going to create a cash flow for a number of entities in those areas. They are also the owners of money that's going in there. I don't think we're going to have a tightening of monetary policy immediately. And so that'll be neutral. And then I think the real interesting question is a wealth tax question, because the wealthy are getting much more wealthier, but at the same time as that wealth is not taxed. And there's a lot more talk about that at the state level or at the federal level, less so. These are the signs, the early signs of needing, perhaps, to sell wealth to deal with some of those expenses. We also have a very concentrated market, right, around AI, around a limited number of shares. And we also, with these wealth gaps, we have a lot of the political problems. As we go into the 2026 elections, it's likely that the Republicans can lose the House and so on. You will see a lot more conflict in different ways. And also that we have the higher interest rates. So the future, if I was to say the next year or two in the future, is going to be more precarious.
Ray, if you were running Bridgewater today, how exposed would you be to some of these AI mega cap names?
Well, you have to bet on that. I would bet also more on the usage of it. In other words, there's the hyperscalers and so on. But the greatest impact is going to come from the users of it. So those who have the platforms for enabling, or those who actually use it to change their cost and their effectiveness, will be the real beneficiaries. They're not expensive like that. But I also know that I have to have diversification. Diversification is very much important. And we're right now in this situation where so much is concentrated on so few. And so that is a particular problem. So I'd be much more diversified. I would deal with that impact. I would also deal with the issue of money. So when you ask how I would be positioned, I think the real question is, what is the value of money? And the value of money is the reciprocal of the value of debt. In other words, debt is a promise to pay money. So you're holding a debt asset. Those are going to give money. We have a problem. We don't have enough money. We're in a situation where, for a combination of budget deficits around the world, military expenses, other expenses, social expenses, have created a dynamic. So I'm I worry about debt, okay? I worry about the issues of debt. That means that I want fiat money. I'm concerned about fiat money. That means that I also would be positioned in not fiat money, gold positions, and so on. So that would give you a flavor of the mix of markets that I'm in and would hold.